Hello and welcome. Let's take a look at QTUM and Theta, mainly talking about that of ratio trading. And I'm going to use QTUM and Theta. And I got all these different colored lines starting back in here, which just fills the whole up and down price movement and weird little whatever looks, which represent past trades, but on the daily term time frame, you really can't make much sense out of it. As far as its volatility, I can make sense that it moves and it goes up and it goes down. And well, here was a spot where if you're able to catch November the 30th, like all the theta charts looking like this type of deal, back up to like in the 50s, down to like 11, back up to 29, down to 21, back to 29, back to 21, and it's broken out. Now it's coming back to that 29, maybe at 32. Okay. Well, let's go back in here because I started ratio trading it right around here, June, probably June 16th or 17th. They're in this high, and let's go on take a look at this on a 15-minute time frame going back then. And at the time, I would have been somewhere probably up around here when the ratio was 29. And then on the 19th of June, we have the price fall down to here, which meant it was technically we call it a buy if it goes down and a sell if it goes up. But regardless if it goes up or down, it's always a buy or sell. It's just in this case, if this is going down, well, that would tell me that theta is what I'm selling. And if it goes up, I'm selling QTUM. Okay, so now that that's out of the way, price action would then rally from those lows. And I would end up getting a sell here. There's a Bitcoin little picture here. And I just put random ones in each time. And the price is right in the middle of this bunch, so 29.05 area. And then I didn't get this one. I wasn't fast enough to get anything there. Nor did I get this one here in the bottom area. Missed opportunities. And you miss some, you miss some. No big deal. But had I got down here, I would have had a nice sell fun. And yeah, it didn't happen there. But the market continued to move. And not a while for a trade. And now it's going up. I must be selling here soon. There we are. The sell up here at the 33 handle. And then it goes up even more. So we'll sell again. And we'll sell again as it goes up even further. Then a decline, and that was a very fast buyback, well higher than this low. I was ready to be buying back again here, look for a possible break higher, and well, there was that break higher, so I sold again. And then we continue on, buy back again at that lower area, buy again, and then it goes back up. Now, this was a great move because we look at the time in here. This happened at like 5 o'clock, and this was 8. I wasn't even up yet. I didn't get in until I got up here. I'm like, oh, look at that ratio, sell. So, of course, I did. And then this one I totally missed out on. There's no other way I had to have been out that day at that time. Because had I been in during this time frame, I most certainly would have sold or bought, whatever you want to look at it as. But the only thing I can think of, being that it was 1,400 hours on June the 28th, is that I was busy at that time. No other way. But then, obviously, it goes up. I sell some more, and then it goes back down. So buy. So we're selling up here at like 47 high, buying at 43 high. That's about a differential of a 10% basis point differential. Another buy, this time 38 high. And then we have a sell here. And then market continues to move down for a buy, up for a sell. And then shopping around. I can be taking advantage of. I can be taking advantage of some of these up and down swings. Volatility here was 41 low and 42 high. So you're looking at like 4%, 5%. Didn't get this one. This happened at 6 o'clock in the morning, which meant had I got this, I could have got this. Nope. No soup for you on that. But there's your coffee in the morning. Actually, that's not in the morning, though. That's at dinner time. But 1,800 hours getting this loan. Now, here's a situation where I beat the number. As the price would have been about 39.60, and yet I would have probably, maybe not. I would have barely beat it, if anything. But did not get the buy down in here at this low. But sold here, bought back here. Now we're on July the 9th. This is just 2 days ago. And then right in here, and then this happened. So you got the buy, and I mean, this is the only way you were getting this if you had sell orders ready to go in theta at that time. There was a lot of them going on, so actually it wasn't like it was hard to do. I mean, I kind of missed out on some because there was like 3 or 4 good ones in a row. I mean, the first one, yeah. I mean, that's you can never expect them to be too common. But then as it came down naturally on this time frame, I was able to get the trade. There's that quick flip again. It's just so common for me to do that. If I see something like this and it flips back like that, I'm just going to sell. And, well, that's where we stand right now. Right now, the ratio is in at 32.35. I last got in at like 32.80, so there's nothing really to do unless we have some sort of move coming back down here, or it's able to maybe come up towards here somewhere. But the whole beauty of this is I don't need to predict where the next move is going to be. Just let it do what it needs to do. I might have an alert in this, I might not. Right now, there's really no need for one. Actually, I do get an alert right here. So I could just stick another one in. And I could be like, yeah, give me an alert if, where did we go, 32.79, so let's add 3. Uh, so as long as it goes to one of those sides or the other, I'll just wait for the market to do what it needs to do. As far as mathematics is concerned, it's been basically, if I get one more trade today, I'll average 1 trade a day. It's like, I don't know, something like 26 trades in 27 days or whatever. I don't know what the number is. Maybe not quite that many. Maybe 17 trades in 18 days or whatever. Now, to think you could do this consistently, you'd have to be damn good or have the right cross, but I may be in a little more time. However, this is an interesting mathematical question. One point zero one to the exponent of 180. And I think it's 6 or 7. I think it was 6. Let me just calculate it on my calculator. And it, in fact, is pretty much 6. 5.99 and some deaths. 5.995801975 my calculator comes up with. So 6x. If you could compound 1% 180 times over, you're getting a 6x or a 500% gain. So in theory, if I could on average 1 trade a day at 10% volatility, selling 10% of what I own on average, well, that's around what this would be. How do I get to that or figure that part out? Well, if I'm trading for a 10% move and I'm putting 10% of my portfolio at risk on the crossing, then I'm going to get 1%. But if I do this, it takes me 2 times to get a flip because on one time I'm going to we'll sell one for the other. Now technically I have to reduce that in half actually. I'd almost need to do this 360 times because the math I'm thinking about, I'm just thinking I'd have to divide it by 2 on it, is I take, again, 10% of a move, that's 10%, and I'm selling 10%, so 10% times 10% is 1%. So on coin A, if that's just where I'm using that as a base gain, then that would be that. But then I'd be having no action on coin B. So that's why I say divided by 2. But even if you go further upon the deal, and I'm talking about getting a 0.5% now instead, that's not going to be a 5x gain or anything. But if I end up putting 1.005 and I put it to the root of 180, I'm getting close to 2.5, 2.45, which would mean 145% of an increase in doing such a feat. And I'm going to make this better afterwards because obviously you might average 10%, I suppose, because there's going to be 8, 9% moves here, 12, 13% moves there. But if you're able to pick away at them, you're going to get them. Now, here's the kicker. There's going to be situations where trades are magnificent, and we haven't had them in the last 2, 3 weeks. But you're going to be at spots where maybe you can, in one day, you get like 4 or 5 trades, maybe. But throwing that part aside, maybe you get a 28% move, a 30% move, a 50% move. After all, you could have a day where you wake up and theta's up 150%, or QDub's up 150%. Ooh, wow. You say to yourself, that's a phenomenal move. So normally on the 10% move, I'm selling around 10% here or whatever of this one coin. Now I'm staring in the face of a 125% move. Now how aggressive do I want to play this? And then the follow back from what that would come into play. When I mean follow back, that means you'd have the big move, you sell, next thing you know, within the next few days, you're getting 20, 30, 40% pullbacks on the market because that's just what happens when something goes up so high. Say theta would go up, say, from 1,000 to 2,400. Then the next day it's down to 1,600. That's the type of action I'm talking about. Or same thing with QDUM. It goes up like whatever. It does better than double, then it gives back a portion of its gains. And just quickly looking at QDUM, I mean, it did pretty much just that. In fact, it gave that back more than its gains. It was like 400, and it's given back like half its value. Or at least it got to 500, and it's almost giving back half its value. It's given back 40% from the absolute highest and lowest price, 500 to 300. And that's going to happen within these markets. Right, lately, the volatility has been amazing with Bitcoin, obviously. As you can see in here, when it's going up to here, the opportunity to buy back there, sell, even buy back here, sell up here, and then all these buybacks from the selling. But among the way, the type of moves that I'm looking to get, and this is more normal in ratio trading, yet it happened in Bitcoin, which is albeit still fine, but is situations in which you have like on the way to a move. And this didn't, obviously this rally failed. But let's just hypothetically assume that it didn't because they're going to succeed at times and we know breaking above this would be a big play. Didn't do it though. But saying that within it, you sell up here and you're able to buy back here, which means you can sell in here, heck maybe even take a little bit of a little bit here, and then you sell again in here, and then next thing you know, maybe you didn't get what the move, but if it was up here, maybe you could have some more sells again. But to get all of these trades along the way before you get there is just pretty cool. With that being said, though, what was end up being sold in here, well, everything gets bought and back, even to the point where like, yeah, I'm selling in here because you bought here, so you're selling up there. Okay, well, what you sold there, you're able to buy back in here. It took a while. After all, you would have sold it like June 22nd. It would have taken a good, well, again, this is an 8-hour time frame, but it would have taken a couple weeks or more, a little bit more. But the volatility, of course, in play, but it's only there if you take it, only price pays. And if you get it, you get it. If you don't, you don't. You miss a few opportunities, well, so be it. You don't really want to look at the opportunities that you miss, but the opportunities that you took advantage of. Thank you for tuning in. Have yourself a great day. Bye-bye.